Dan, I guess maybe just to start things off, tell us what you're seeing on the ground there as it pertains to demand for the semiconductor space.
Yeah, I mean, since October, we're seeing about a 12 to 15% increase in terms of demand. And that's significant, clearly a good barometer going into NVIDIA next week. But I think it just shows these enterprise use cases are exploding. And that is really accelerating demand because no one wants to sort of lose their spot in line. And I think that's just more and more bullish for the AI revolution, the second, third, fourth derivatives. I mean, that's so far from our trip, very, very bullish and feeling really good going into NVIDIA next week.
Is NVIDIA still a top pick for you? Everything you're seeing there just reinforcing what you like?
I think it's a table pounder. I think it's going to be a $4 trillion and eventually $5 trillion market cap because there's only one red phone to call for these chips. It's the godfather of AI, Jensen, NVIDIA. And what I'd also tell you, and we talk about in the note, from a DeepSeek perspective, 45, 50 enterprises, not one has changed plans post DeepSeek. I think it just shows this CapEx doubling down. That's what we're seeing across, not just big tech, but across enterprise.
Dan, there were some takes last week on this AI summit in Europe where some of the survey work being done had some constituents saying, yeah, we're curious, but we're not seeing outright value on these investments quite yet. Where do you think AI, how much of IT budgets does it make up and how much could it get to?
Yeah. I mean, Carl, I think that's why you look at names like Palantir, right? The kind of sort of the golden child in terms of use cases, monetization, as it's already playing out. We believe everything we're seeing, it's about 10% IT budgets, and in some cases, 15%. Now, look, there's some enterprise and, of course, places around the world that are not going down the AI path, of course. But they're going to have to delay their initiatives for, I'd say, 12, 18 months, because right now, demand's outstripping supply 15 to 1. And that's why I sit here and I think tech stocks are going to be up another 25% this year, despite tariffs, despite nervousness, worries about stretch valuation. I think Street is massively underestimating what demand looks like in this AI revolution, second, third, fourth derivatives.
And so if demand is going to be that strong, and you just mentioned tariffs, I mean, do you think tariffs are somewhat of a non-issue, meaning you're just going to pay what you have to pay because you need these chips to do what you've planned to do?
Yeah, and Courtney, you were talking about with Eamon before. I mean, I think this is all a poker game, right? And I think, it's very easy to get nervous in terms of first shots across the bow. I don't believe it's going to massively impact the chip and overall AI revolution. I think there's also going to be some gaps in terms of whether it's Apple, Tesla, potentially, some opportunities that they could ultimately not really even be impacted by some of the tariffs as this all plays out. But what we're seeing here in Asia, less nervousness about tariffs than maybe even 6 weeks ago. And that's bullish when you look at this relative to overall demand and what's going to really be a game of high-stakes poker between DC and Beijing.
Recent insights from Wedbush analyst Dan Ives reveal that Nvidia's latest Blackwell GPUs are experiencing demand that comfortably eclipses supply. The phenomenon hasn't just stirred the tech community, but has also kept the investment world on their toes, as major companies are significantly boosting their capital expenditures to keep pace with the AI revolution. How will this affect the Nvidia stock as we go further into 2025? Dan Ives may have the answer. Welcome back, everyone, to Investocracy.
Don't you think we've got a big inflection point coming next week when NVIDIA reports?
No, I think that's a couple of days.
No,
we know what they're going to say.
I think it's.
No, we don't.
I don't know. We don't know. I think it's.
We don't know
the magnitude.
We really don't know the magnitude of what a.
We don't know if they can beat or miss, right?
Yeah. Well, I mean, it'd be a shocker probably if they missed, but the degree of the guide is going to be a pretty big determining factor. Speaking of, you have a new charitable trust, right? And you bought Nvidia. You added 2 stocks to it. We'll talk about one later, but Nvidia, welcome to the Nvidia investing game.
Well, I think welcome to 6% weight in the S&P 500. I think that's a factor that should be important generally. We've made a decision not to own Nvidia. We own Broadcom and have added to it at the firm. But for the trust, we thought a 6% weight in the S&P being naked that stock is really a commitment, and that's a statement that we didn't feel we wanted to make right now. And so we added. We also think that the stock has been in a decline. It's recently come back, but it was an opportunity to take advantage of it at a price that was, off the high. And there's no question that with everybody spending $100 billion, we just heard in the last few weeks on artificial intelligence, a lot of that goes toward their chips, which are dominant and will remain dominant.
Nvidia is looming large. Speaking of AI chips, you like software over that space. How big of a market event do you feel like this is leading up to next week?
Look, I think it will absolutely be important. The market is craving some forward guidance on, the outlook, especially with the introduction of these new AI models. And with the amount of concentration that you've had in the Magnificent Seven, the other chip makers, it is going to be important. But again, going back to that theme of the potential for the rally to really broaden out, I think investors would be well served looking elsewhere for upside opportunities.
According to Dan Ives of Wedbush, demand for Nvidia's advanced Blackwell GPUs reaches such feverish levels that it seems Nvidia's manufacturing plants are barely keeping up. This surge is driven by enterprises determined to up their game in AI, ignoring recent stirs in competition from companies like DeepSeek.
On many of these companies, many of the technologies that are at the center of the meltdown today, does this worry you?
I mean, in my view, it's a top 3 buying opportunity that I've seen in the last decade for tech. And the reason I'm saying that, I spent the whole weekend talking to tech executives, CIOs, individuals that I know that are going down the sort of AI arms race or going through use cases. In no way of really 25 companies does this change their sort of plans, and a lot of these could be 7, 8, even upper 8-figure type budgets. I just continue to view this as it's a model, and a lot of the details I think still need to be vetted out in terms of 6 million. Do they actually have the H100s, how they actually built it? But this is something we're going to look back on, and I think the street and the market got this way wrong. In no way does it dent our bull thesis. That's what we've been telling clients really since the weekend. These are the times you own these names.
Dan, not all of the companies at the center of the sell-off today are necessarily affected the same way. Mm-hmm. Chip stocks, Nvidia, Kelly mentioned it, $500 billion in market cap lost. That's more than the size of ExxonMobil. That's roughly the size of United Health Group in terms of an entire company lost in market value. Some are affected more than others. Mega cap technology, not as much so across the board as, say, Nvidia per se. When this is a buying opportunity, how much of a buying opportunity and how specific do you have to be?
Well, first on Nvidia, that continues to be, I think, the golden goose in terms of what Jensen and that company are ultimately. There is one chip in the world. There's one GPU that's fueling AI, and it's Nvidia. And when you think about these build-outs, when we talk about the enterprise, the $2 trillion of AI CapEx next 3 years, that doesn't change from DeepSeek. We're talking about 1/1000th of ultimately the build-out that you're going to need for a lot of these enterprise use cases. You look at names like Palantir, you look at the hyperscalers. I could argue with inferencing, if you actually think costs are coming down, it's actually bullish for even some of the software players, names like Salesforce, ServiceNow, Oracle, and others. I just think this is when you look at NVIDIA, I think we sit here 6, 9, 12 months from now and look at this as a moment. It was a golden buying opportunity, and in no way changes our bull thesis for where this is all headed.
The numbers back it up. Wedbush's crystal ball forecasts about 10% to 15% of IT budgets are set to be allocated to AI by 2025, with $100 billion to $325 billion in capital expenditures on the line. This isn't just a tech trend, it's a mega shift. The chief architects of this AI expansion, massive clouds powered by none other than Microsoft, Amazon, and Google. They are building AI systems robust enough to handle whatever tomorrow throws at them. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Well, look, I think that there are a lot of people recognizing there was a panic, and the panic was frankly from out of China and whether they've passed us. It was very reminiscent to the Sputnik period in our country, how the Russians passed us, and
You're talking about DeepSeek. Of
Yes,
course,
I
this
am.
is weeks ago at this point, but the reaction, particularly in Nvidia stock and in many of the power suppliers,
Yes.
which I think continues to be a question. I would
say
raise
that.
here.
A lot of people are saying, look, right now, it's still good. A lot of people are saying, when I was with a lot of CEOs, look, if Meta, if Alphabet, if Amazon are still committed to Nvidia, then there was no surprise.
Right.
I believe that. I think that there are another wave of thought, which is just actually good for Nvidia because it gets more people on board. Not sure if I agree with that, but it is a cheap way to get on board, and then you do need training, real training. I think the excitement part is video. Video means robotics. That's the next leg for
Nvidia.
Yes.
So, what's the investor takeaway from this electrifying saga? Nvidia stands poised at the front lines of a technological war that promises growth and innovation far beyond our current imagination. With AI placing such large bets, the company is in an enviable position to lead and profit from this evolution. But do you have another perspective about what Dan Ives said? Feel free to share. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.